Hello, everyone, and welcome back to Everyday Millionaires, the podcast where we bring you real people with real wealth and real stories. I'm your host, Harry. Thank you for tuning in today. Before we dive into this amazing episode, please make sure you hit that subscribe button. It helps the show grow and it means you'll never miss another story that could change your financial future. Today, I have a very special guest joining me. Her name is Olivia. She's 45 years old. She lives in Florida. She's financially free. She's a millionaire investor. She now makes $120,000 every year in passive income. That means she does not have to work if she does not want to. Her money works for her. But her story did not start with millions. It started with a regular job, some curiosity, and a bold decision to invest when others were afraid. Olivia, welcome to Everyday Millionaires. It's great to have you here.
Thank you, Harry. I'm really happy to be here. I love your Udemy course. I hope my story can help someone who's just getting started.
Let's go back to the beginning. It's 2009. What was happening in your life?
In 2009, I had just gotten my first real job. I was 29 years old. I moved from Georgia to Florida for the job. I started working at a small tech company. We built software for hospitals and clinics. It was not a big company. We worked in a small office with flickering lights and an air conditioner that made funny noises, but I was happy to be working. The economy was still rough after the 2008 crash, so I was grateful.
How did you get into investing?
It happened by accident. During lunch breaks, one of my coworkers, Dave, would talk about stocks. He always had a tab open on his computer. I asked him one day, what's so interesting about those charts? He said, this is Nvidia. They make graphics cards. They're going to be huge. I had no idea what a graphics card was. But I went home that night, read a few articles, and decided to open a brokerage account. I bought 20 shares of Nvidia. They were around $15 a share. That was my very first investment.
What was it like in those early years of investing?
It was messy. I made a lot of mistakes. I would buy stocks just because someone mentioned them online. I would panic sell when prices dropped. I didn't have a plan, but every mistake told me something. I started reading books like The Intelligent Investor. I watched YouTube videos. I joined forums. I learned that investing is not about guessing, it's about understanding and patience.
When did you start focusing more on tech?
I worked in tech, so I understood it better than other sectors. I could see which companies were growing and which ones were falling behind. I started building a tech-heavy portfolio. I owned stocks like Apple, Microsoft, Google, and Shopify. I believed the future was digital, and I wanted to be part of it.
Now let's talk about the strategy that really gave your wealth a boost. You told me about a rule you created involving a specific ETF. Can you explain that?
Yes, around 2016, I discovered a leveraged ETF called TQQQ. It moved 3 times faster than the Nasdaq 100 index. That means if the Nasdaq goes up 1%, TQQ goes up 3%. But it also means it drops faster. It's not for the faint of heart, so I made a rule. I told myself, every time the Nasdaq drops between 15% and 20%, I will buy TQQQ. I wouldn't buy it on normal days, only during corrections or crashes. That way, I could buy it cheap and hold on during the rebound.
That sounds risky.
It was risky, but I was careful. I didn't put all my money into it. I only used a portion. The first time I did it was during the correction in late 2018. Stocks were falling and people were scared. I bought TQQQ and waited. Within a few months, the market bounced back and I had doubled my money.
Did you stick with that rule?
Yes, every time the market had a major dip, I followed the rule. In March 2020, when the COVID crash happened, I bought more TQQQ. It was hard. Everyone thought the world was ending, but I stayed calm. I knew the pattern. It paid off. By the end of 2020, I had more than triple my money.
When did you start thinking about moving to passive income?
By 2021, my portfolio was doing very well. I had some big gains, but I was also feeling tired. I'd been working nonstop, checking stock chart every day. I wanted a simpler life. My father also got sick that year. That really changed my priorities. I didn't want to spend my life just staring at screens and chasing growth. So I made a big decision. I started selling some of my tech stocks. I kept the strong ones, but I took profits from others. I used that money to buy rental properties and dividend paying stocks.
Tell us about your rental journey.
My first rental property was a duplex in Sarasota. I paid in cash, about $220,000. I fixed it up a little, then rented both units. It now brings in $2,100 a month after cost. That gave me a taste of steady income. I bought two more properties over the next 18 months. One is in Gainesville and the other is in Ocala. Both are rented out and bring in consistent cash flow.
So now you're earning $120,000 a year without having to work.
Yes, I have rental income and dividends. Every month, money shows up in my accounts. I still do some freelance consulting, but only when I want to. I don't depend on a job anymore. That's the biggest win.
What does a normal day look like for you now?
I wake up without an alarm. I make coffee. I walk my dog. I read a book or take a yoga class. Some days I check in with my tenants. Other days I visit my mom or work on a small project. I don't have to rush. That's the best part. Start early. Start small. Don't try to time the market. Invest in what you understand. Be consistent. And most importantly, have a plan. Even if it's a simple one. My plan was to buy tech stocks and follow my TQQQ rule. It wasn't fancy, but it worked.
That sounds amazing. You mentioned earlier that you also get income from dividends. Can we talk about that?
Of course, dividends are a big part of my current strategy. I wanted to build a portfolio that could pay me whether the market goes up or down, so I focused on buying high-quality dividend-paying stocks and ETFs.
Let's talk about that. A lot of people are curious about dividend ETFs but don't know where to start. What can you share?
I started by researching ETFs that focus on reliable, consistent companies. I liked ETFs because they spread the risk. I didn't want to worry about one company having a bad quarter, so I bought into dividend ETFs like VYM, Vanguard High Dividend Yield, SCHD or Schwab US Dividend Equity, and DGRO iShares Dividend Growth.
What do those ETFs offer you?
They offer a steady stream of income. For example, VYM pays quarterly dividends. SCHD includes strong companies that have increased dividends for years. DGRO focuses on growth and reliability. I reinvested the dividends for a while. Now I take some of that cash out each quarter and use it to cover part of my living expenses.
So how much of your $120,000 passive income comes from dividends?
About $4,500 per month. That's $54,000 per year. The rest comes from rental income. My dividend ETFs give me peace of mind. I don't need to sell anything. The income keeps coming and I'm not worried about daily price swings.
Any mistakes people should avoid?
Yes, don't chase what's hot. Don't panic when prices fall and don't try to do everything at once. Focus. Pick one or two strategies and get really good at them.
And if someone listening is in their 30s or 40s and feels behind,
It's never too late. I started at 29. I didn't come from money. I just kept learning and taking action. You can do that too. Your first investment won't make you rich, but your discipline will.
Olivia, this has been such a powerful and practical conversation. Your story is proof that wealth is possible for regular people. Thank you for being here.
Thank you, Harry. It's been great. I hope my journey can help someone out there get started.
If Olivia's story inspired you, please subscribe to this podcast, share it with a friend, and leave us a review. We'll keep bringing you the stories that remind you wealth is not just for the elite, it's for everyone who's willing to learn, grow, and take action. Thanks for listening. This is Harry from Everyday Millionaires signing off.